Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to be talking about a new company which is very soon going to get listed on the bourses. It's a household brand since many years. Again, basically, it is known by the Indian consumers, and perhaps it's a pleasure today for us to be welcoming the management on the show. Let me welcome the company, Cello World, and the management, Mr. Pradeep Rathod, the CMD of the company, and Mr. Atul Parolia, the CFO of the company. Gentlemen, welcome to the show.
Thank you.
So, sir, your brand basically, I would say, doesn't need any introduction. Household brand across the country, people know about it. But let me ask you this question: why at this point of the journey, why basically company has decided, the management has decided to get the company listed?
So obviously there has to be some reason, and as you said, it's a well-known consumer brand into the spaces where we are, and over the last 35 years, I think so. We will get much more vision on the brand, wider vision for the brand once we are listed company. Number two is to grow beyond this inorganically. I think so. The when once we are listed, our share price can become a currency to grow inorganically and look for some good businesses to merge or to acquire. Number three, today it is a promoter-driven company with a strong management by the side, but we would like to professionalize this company over next 5 to 7 years. So these are the three goals what we wanted to achieve to take the company grow much further from here, and in 5 years to 7 years become a real professional company uh, of a sizable company. What it can be at across in this spaces across the world.
Okay. Another point which I was finding very interesting as I was going through the entire data and the numbers, and I was finding that your margins, gross margins, EBITDA margins, those are those have been higher than the competition. And
Yeah.
while it is very good for the viewers to really note this fact that the EBITDA margins and gross margins are higher than the competition,
Yeah.
return on capital employed is higher than the competition. You're talking about extremely strong return on capital employed.
Right.
Obviously, ROE are going to follow the same trend. Usually, when this happens, we from the research background, we say that the company has a competitive advantage or a moat. And I think it is pertinent to ask you how you're able to maintain this.
So it's just creating a perception. Um, More so, I'm not saying that when we have a competition across, it's not a seller's market, it's a buyer's market. Everywhere you have competition. But how you perceive and what products you want to enter, and what are there are low margin products, there are high margin products. So our historical thinking and the philosophy had been that we want to grow at a handsome space, but we do not want to compromise too much on our margins, which has become a perception. That if it is Cello, I think so it is 3 to 5% more costly, but we are giving that product quality, and because of the basket becoming so diverse, we are able to maintain the profitability, because when we do our costing, we do not go beyond our writing. Also doesn't go okay, इसका pricing क्या रखना चाहिए, it should be at this price and this should be the margin. Product mix is the biggest thing. That's why we could be able to maintain this margin over across years, and in future also we intend to grow at a healthy bottom line. Uh, so we would not like to grow much faster and compromise on our bottom lines.
Right, sir. I think since we are recording, I think I'm just taking a pause and asking. I think the it is getting stuck. Vidhi, is there a network issue on the guest side, or we are facing some issue on our side? Because normally it's absolutely seamless.
No,
अच्छा ठीक
here,
है
yeah.
ठीक है okay. We'll resume then. Um, my next question, sir, is from the perspective of numbers. I was seeing the numbers. Return capital employed basically was very high last year, last to last year. Were there any investments which you have made last year?
Yeah,
Any
see,
capacity expansion and anything where you've made upfront investments?
in the last year, financial year 2023, we have acquired two business. One is the writing instrument division, another is the furniture division, for which
Ah,
we have
that's
acquired 50, yeah.
So we have consolidated that businesses also into Cello World, whereby the you can see the capital going up a little higher.
right. And how much amount of money was being invested?
Uh, Both the business around 420 crores.
420 crores. And right now, sir, what's the capacity utilization for that acquired business?
So writing instruments was one. Unomax, which is the brand now owned by Cello World, where we operated, uh, would be at around 70-75%, growing at around 25 to 30% CAGR. It grew last year also around 27 to 32 to 34%. This year also we intend to grow around 28 to 30%. Furniture business was a vertical, but that's a listed arm of the group, first listed company, which was listed in 1995. The growth level over there is not very high because of a lot of scattered market, and it is highly dependent a little more on the polymer pricing. So,
Mm-hmm.
but it has a lot of cash in the company. We have around 250, 280 crores, which is lying idle. And once we have acquired that's now a subsidiary of Cello World 55%. And I think so the pet last year was around 45 crores. And
Okay. So
that
it's a profit making entity.
yeah, yeah.
Absolutely. And except the acquired ones, the core company capacity utilization is that also around 70%?
So yes, on our consumer wear non-glass, it is around 75%. On glassware till last year, it was almost 95% to 100%, 95% you can say.
Wow.
And we have put a new furnace this year because
Yeah.
in glassware, it cannot be that I can expand for 20, 30 crores. Either I have to put a furnace which will give me 250 crores to 150 crores addition. So this year, August, we have fired our new furnace. So now our capacity is today, if you tell me I am at 70%, last year till March, I was at 95%.
Right, because your numbers were telling that fact that either something is going to be invested and something has already been invested. That's why I was asking you this
Yes.
question. Help us understand how much funds you're raising for in this IPO, and sort of what is the fund usage going to be?
No, so
Either either Atulji or Pradeepji.
it's a complete OFS. So we are not taking any primary money into the company. Primary
Right.
issue because I think so. At the as you said, the return on investment and the bottom line uh, has always given us a very healthy uh, cash flow to manage all our expansions from within our internal accruals. And for the next 3 to 5 years, whatever our plans on capex and growth are, I think so. Our internal accruals will be self-sufficient to grow from here.
So then I'm so curious to ask you, for the capacity expansion, has the money already been invested, or basically, or there is some amount of money from internal accruals which is going to be invested in FY24 also?
So at 24, we will invest, but the first furnace is already done. Our second furnace, one more furnace we are putting in Rajasthan, which will be a greenfield project again. So that will be our 14th plant at the group level. So in Daman, we have 8 plants, and Rajasthan, this will be the new plant which will come, which will make soda lime glass, which is drinkware. Today, we are into diningware and hotware,
Right.
which is opal glass. Now it will go for drinkware. So post that, Cello will be the only company to have both the verticals in India.
And drinkware actually is
Around
a very big market. So from that perspective, what's the normal asset turnover, sir, which the company is generating right now?
sir, asset turnover to glassware is completely different. It is around 1.5 to 1.7 times on capex. On our plasticware, writing instruments, and molded furniture, it could be in the range of 1 to 7.
Right. And what's the amount of the blended capex which we are doing, right? Your new plant in Rajasthan, another plant which you have already set up, which is the furnace which you have already set up. What's the combined investment which you have made already?
No, so the Opalware plant, Opalware second furnace, we have already paid everything, and it is from our internal accruals. In Glassware, it is a capex of around 200 crores, including the land and building, in the phase one, which will be completed by March of 24, with some of uh, the monies we have paid already, around 25% to 27% we have already paid from our internal accrual.
And
150 crores would be another expenditure which we'll do in next 7 to 8 months.
sure. So 200 250 CR for this new furnace, which is into Rajasthan, right, sir?
Right, right.
And just another furnace which is completed. When that was commissioned, sir?
August end
August end.
this
And
year, yeah.
how much of investment went into this furnace, which was commissioned in August?
Around 75 crores.
Right. So
Because
roughly
it was
around
next
two.
to our no, it was next to our first furnace, so the capex was much not that high because there were some utilities which are common.
Brownfield. Yes, brownfield. Yes.
Yeah.
So will I? So I'm not asking you to project because we can't project, but I'm just calculating. If I say that average asset turnover 1.5, combined investment of around 250 300 CR, are we talking about an incremental 500 CR revenue over the next 1 2 years whenever both the furnaces mature?
Around 425.
Yeah, that I think that's something our viewers should really take note of because that's something which is good, both on a return perspective and a revenue growth perspective. So perhaps something good. Um, so help us understand how's the sort of competitive intensity in the market right now, and how's the market behaving at present? Like, is the demand looking good? Because we've been hearing from different industries, on ground consumption has been quite strong.
Sir, it's the way the demands are not as great in consumer spaces, more so in the rural areas. Though it's picked up over the last 1 month, the first quarter was subdued. We could grow in our value terms, and we had a fantastic quarter one. Quarter two also seems to be good on the bottom line because the raw material had really come to a very reasonable level from a very high level, which was last year. And there was some price correction also from our end to the consumer, which definitely gave. And we, in that term, we even increased our EBITDA also by 1.5 to 2% in the first and second quarter.
So
The demand
what's the
going forward, I think so for another 1 or 2 quarters would not be that great what we saw in 22 and 23.
and what's the chief reason you see for that?
Hmm?
What is the
What
primary reason you're seeing for that? Is it a slowdown in the rural market, or like what's the primary reason for a mild slowdown?
I think this is the consumer behavior. If you see across spaces, uh, maybe because of other items of day-to-day use and everything is going so high, so there is a little leeway left to the consumer uh, on products which are not of daily use.
Okay, sure, understood. Apart from that, sir, question to both of you: how are the export markets doing for you, and how important those markets have been for you?
Sir, our exports is basically in writing instruments is the highest segment where we export, because writing instruments India is the low cost manufacturer in a good way because we have hand assembly and we can give more SKUs faster than any of the developed countries. Opalware, we did not. We have a very good chance of exporting, but we did not export very high till last year because we did not have the capacity. With the new furnace in, we see a lot of export growth potential over there. Our third segment is consumerware non-glass, where we export healthily, but we export only with our brand. We do not go for any OEM or any supply to big stores. We want to sell with our brand and only grow that market with our brand. So writing instruments is the biggest segment. It will grow. It is growing at around 20-25% on the export front. Opalware can grow, Glassware will grow much faster in percentage term because it's a small, very small exports today. Last year we did around 16 to 18 crores, and going forward it will grow at a much bigger pace once we have the new capacity in. Houseware, again, 16 to 18% is 20% what we are targeting to grow in our field, and the same level we will grow our exports also.
Right, sir. And perhaps one of my last questions would be that from a perspective of raw material prices, what are the cheap raw materials which you actually use for making this? Like, I'm just trying to understand which type of commodity prices could actually really impact here.
So in a consumer wear glass, there is raw material is all locally available. It is more of silica, which is not a major thing. Um in our consumer wear, plastic is the biggest segment. Polymer and polymer next 1 year looks very muted for us. I think so. From a high, it has come to a reasonable level, and I think so further, what we see trend for next 1 year, it should be at a stable level from here. Second is steel, stainless steel, where we use for our lunch carriers, casseroles, and other items. Is also at a very reasonable level today. And third is our packaging material. So all three are in favor for the industry for, I think so, at least a year, what we are seeing.
Right, sir. And my last question, and that would be from the perspective of any inorganic expansion, which are the target areas that the company is looking, having already made some acquisitions. Now, what the company is really looking forward towards in the next 1 2 years?
No, so we are looking into our adjacent fields only. We have, and over the next 2 or 3 years, 2 years, we will see definitely that inorganically where identification is there, but going forward, we will definitely go on to that way.
Right, sir. I think it was a pleasure talking to you and getting all the frank opinions, detailed insights about the company. And after
Right,
having had a look at phenomenal numbers, strong
right.
return on equities, I think the IPO, I think perhaps should be a delight for the investors. From our side, all the best wishes to you.
Thank you, sir.
Thank you.
Thank you very much.
Thank you.
Thank you.
And dear viewers, with that, we come to the end of this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.